Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions, featuring the proprietary bull bear point and figure market breadth summary chart for December 16th, 2018. Market breadth. With this past week's market decline, our bull bear point and figure ratio at 0.32 rose slightly from 0.30 last week. The total count of securities in bullish or bearish patterns increased 3% to 3,072. The count of bearish stocks increased 1%, while the count of stocks in bullish patterns increased 10%. The Pirls P&F Market Breadth Summary Chart shows us a market now 13 weeks in bearish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive the weekly Pirls Stock Market Commentary via email free of charge, simply enter your name and your email address in the spaces provided and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 106 points for the ninth decline in 14 weeks. At a negative 694.93 points, it continues below all 8 tops above plus 100 in the last 30 months, and it continues below 4 of the 5 bottoms below minus 100 in the last 30 months. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in distribution mode, with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 3 accumulation days and 1 distribution day. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode, on higher average daily volume. Momentum. The CCI 20 daily, in a Woody's downtrend, is now at a negative 101.53, down from negative 75.90 last week. At Thursday 12/13 close, the CCI 20 daily formed a zero-line reject short entry signal. We will follow the results of this trade simulation in next week's commentary. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's downtrend 4 weeks ago, while the daily CCI 20 began a Woody's downtrend 9 weeks ago. The CCI 20 weekly, in a Woody's downtrend, fell to a negative 117.97 from a negative 105.64 last week. It continues outside the plus or minus 50 range required for a valid zero-line reject short entry signal. Industry rotation the last 2 weeks. 2 of the top 5 industries are positive, and all of the bottom 5 are negative. Summary: gold and silver, REITs, and some tech on the top. Oil services and banking on the bottom. Bullish, oil services continues in the bottom 5. REITs continue in the top 5. Networkers has entered the top 5. Brokers has left the bottom 5. Oil has left the top 5. Bearish, KBW Bank continues in the bottom 5. Gold and silver continues in the top 5. S&P Retail has left the top 5. Focus this week from the X22 Report YouTube channel, quote, "Bringing the Fed down with gold. Past quotes from Trump confirm it." Episode 1742A. End quote. Thank you for watching this week's Sand to Pearls Stock Market Commentary video featuring the proprietary Bull, Bear, Point, and Figure Market Breadth Summary Chart compiled by Donald Pearl. www.s2pmarketsignal.com. For Sand to Pearls Stock Market Commentary, I'm Cynthia Pearl, hoping that you have been enjoying a peaceful and pleasant weekend, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.